Hello and thanks for joining us at interest.co.nz. I'm Janae Tibshirani and today I'm joined by the Minister responsible for the Earthquake Commission, David Clark. Thanks for your time, Minister.
Hi, Janae. You're welcome. Good to be with you.
A seismic amount of risk will be transferred from private insurers to the public purse as the government is doubling the amount of cover EQC will provide homeowners in the event of a natural disaster. So this means that if there's an earthquake or tsunami, for example, and your house gets damaged, EQC will cover the first $300,000 and your private insurer will cover anything above this. So this means that EQC is taking on a lot more risk, and so it will hike premiums possibly by a couple of $100 a year. And because private insurers are taking on less risk, they should technically cut premiums. Is that your expectation, Minister?
Well, yes. In short, overall, obviously there'll be a few overs and unders, but it's my expectation that as EQC increases its premiums, that will be a greater portion of the risk that's been covered. It will mean that insurance is more affordable and available to New Zealanders over time. We know that when the scheme was first conceived and had a cap of 100,000, that was roughly the cost of building a new home in the early 90s. Now, of course, it costs more than 100,000 to build a new home. And so by raising the scheme to $300,000, it's closer to the cost of building a new home, although in many cases, new homes cost more than that.
Okay, look, this issue raises a number of interesting questions. I mean, the obvious one is, what's the argument for the state to be playing such a large role in providing insurance cover for homeowners? Is that not, is it something that they should take such a great burden on? Is 150,000 not enough?
Well, one of the recommendations of Dame Sylvia Cartwright's inquiry was that the state take on around 400,000 of this cost. We haven't gone quite that far, but we accept the underlying principle, which is about social insurance and making sure that the high levels of insurance that we have in New Zealand are maintained over time. There's a risk that will be eroded. And of course, when there aren't high levels of insurance, that means that either New Zealanders, when they're struck by a natural disaster, are left in poverty, or the government is required to step in. We think high levels of insurance are really good to keep an economy going, to ensure we're well placed in the event of a natural disaster, and nothing has taught us the importance of being prepared than a COVID-19 pandemic.
Sure.
So we're trying to make sure that we're all well dressed here.
Okay, but right, so we hear a lot of stories about people in Wellington who own apartments, for example, perhaps people in South Dunedin who are struggling to get private insurance cover. Insurance companies are either saying no, or they're charging really high premiums because they just see the risk as too high. Do we have a sense of how many households are actually struggling to get insurance cover? Because it's very hard to know, because if you are in that situation, you're not going to promote the fact that you can't get insurance, because then your property value will fall.
Yes, and this is one of the issues. We do know at the margins it is challenging, and particularly in flood-prone areas, people are struggling to get insurance. Where there's high seismic risk, we know that that's a challenge, particularly in Wellington. There are some insurers, we believe, who think that their book is full in that particular market. And so what we're doing here, by taking a greater portion on the Crown, is enabling the market to work more freely. We think it will also mean that there will be more opportunity for small insurers to step in, because to cover niche areas as well, and to compete against other insurers in the market, because with a higher portion of the risk covered by a large book that EQC holds, that will lower premiums overall, whereas new players in the market do have the challenge that when they're small, they don't have the scale to get the lending, the reinsurance that they need to enter the market in a meaningful way. So we think it will do good things for the market overall as well, and make it more competitive over time.
Okay, look, I guess I'm just wondering, what we're doing here is socializing the losses. And I'm wondering what the case is for doing that. Do we know exactly how many people can't afford or can't get insurance as it stands?
Well, as you pointed out, there is a strong incentive on people not to report that because they don't want to advertise if they're struggling to get insurance. So we know it's at the margins at this stage. But in terms of the social insurance concept, obviously, as a proportion of the market when the scheme was introduced, it was more than we're actually getting to with this change. We're striking a balance here. We want a flourishing private market in New Zealand. We believe the insurer response model, where people have a relationship with their insurer, means that in the event of a natural disaster, there are lots of offices around the country open to deal with claims and to deal directly with their customers. But we're also trying to make sure that we're covering sufficient risk that we actually have high insurance uptake across the country. We saw with AMI falling over in Christchurch that risk quickly reverted to the Crown, and we don't want to be in that situation where the Crown faces risk it's not expecting in the case of a natural disaster.
Okay, but if insurers are well capitalised, which they should be, and the Reserve Bank is actually looking at that issue at the moment, the capital standards, the amount of capital that they need to hold, then hopefully we won't have another AMI situation. But I guess the question is, why should somebody who doesn't own a property, who's paying income tax, essentially underwrite, take some of the risk out for someone who does own a property, so is potentially more wealthy, who lives on the coast, for example, or who lives in a central Wellington apartment?
Well, I think the word hopefully is the word that's really key here. Hopefully we don't have another AMI. It was hopefully we don't have an AMI in the first place. There is a risk that reverts to the Crown, and we want to ensure high insurance levels continue across New Zealand. It's a real advantage. You see in places like California, very low insurance uptake and high earthquake risk. We want to continue to have that available and affordable insurance cover. That means New Zealanders take up insurance. And actually, earthquake risk is split across both rich and poor in New Zealand. So it's not something, it's not true to say that there would be a big burden falling on, that it would be unevenly shared here. There's actually no particular discrimination when it comes to earthquakes.
Okay, look, moral hazard is the other issue that this raises. Say if I'm looking to buy a house, currently I might think, hold on, I'll avoid the one on the coast because my insurance premiums might be higher or whatever. But now I might think, oh, well, actually I will buy that place because I know that EQC is there to backstop me. Is that an issue here?
Well, this is something that we looked at in deciding where the cap should lie. And it was certainly something, some of the bigger insurers raised in the conversations I had with them. That is partly why we've struck the balance where we have. We haven't gone as far as Dame Sylvia Cartwright recommended, and some spoke of a higher amount for that cap. We think we've struck a balance here, so there will still be price signals in the market that will mean that those who are thinking of buying properties in riskier areas, and particularly if they're going for larger properties or fancier properties, they will face a price beyond that 300,000 cap. And so that maintains, we think, the balance. It's probably not quite as much social insurance as when the scheme itself was conceived right at the beginning, when it roughly was the cost of replacing a house. But it moves us closer to that. And so again, it's a balance.
Okay, just was wondering if you had any numbers. So currently, or as at 2019, I believe the first $1.75 billion, if there's a big earthquake, for example, the first 1.75 needs to be covered by the government, and then above that, reinsurance. And there was about $6 billion of reinsurance cover. Do you know where those numbers would sit now? What would be the excess, I guess, and then what would be covered by reinsurance?
Look, I don't have those numbers right in front of me now. Happy to come back to you with them. I'd rather get them right than quote them wrongly.
Okay.
It's very much the case that the Crown guarantee is still in place. So for EQC as well, I think that's important to say. The government ultimately is the backstop in this scheme, and that suits reinsurers. It means that they feel confident offering good premiums to New Zealand. I've spoken to global reinsurers, and they really like New Zealand as a market because we have a good understanding of our earthquake risk. We do plenty of research here. EQC is regarded as a very competent organisation internationally, and of course, you know, in the global reinsurance market, they're looking at frequency versus severity, and they like to vary up their risk. And they have increasing amounts of frequency with climate change. You know, the west coast of, coast of the United States, with the Florida and so forth flood events coming through more and more often, mean that they've got a risk book that is very full of frequent risks. New Zealand is more in the category of severe risks, but infrequent. And also is relatively small in the global numbers. So, you know, as a new minister, I was nervous that after the events we've had here, global reinsurers might be nervous about New Zealand. Quite the opposite. They see New Zealand as an opportunity with a different kind of risk for their books, and one that's very well understood by international standards, because we've got competent institutions here that understand the nature of the risk, and that makes their pricing more competitive for us.
Okay, just finally, so will the amount of reinsurance cover effectively double or increase quite a lot? I'm just wondering how exposed the Crown's balance sheet is.
Look, that will be a negotiation in terms of the cost of the reinsurance, and you know, that obviously will be led by EQC. The Crown ultimately bears the risk if the EQC, you know, with the Crown guarantee, if the EQC books are not topped up, but they're not called on very often, and so, you know, we'll see those books top up again until the next natural disaster.
Okay, Minister David Clark, thank you for your time, and I'm Janae Tibshirani from interest.co.nz.
Thanks, Janae.